Hello everyone, this is Marcus Downs with Megastar Financial, and I'm reporting to you live from my office. I'm actually at my office today. So wanted to give you another update about the state of mortgages. So I've gotten even more questions since my last video, and I thought I'd address some of those questions. So the first one is, are mortgages harder to get? Like, are qualifications getting more difficult, stringent? Are less people qualified? The short answer is yes, but barely. So what I mean by that is, okay, on the one hand, you see a lot of lenders requiring, let's say, assets on a certain product type. You know, meaning that you just have to show that you have a 401k with some assets in it. That's not much of a change. And for most people, that's not going to really affect their ability to purchase or refinance. There are some articles out there, namely CNBC and Money, that were announcing that Chase is raising their minimum credit score to 700 and down payment requirement to 20%, which sounds crazy. I mean, you haven't seen that since the Great Depression. But I also think that's not necessarily not only true for just Chase, but not even true for across the board. Like, I'm not seeing that from other lenders. And with regard to Chase may have some rules that they've established for their retail branches. Okay, I can't confirm that. But as far as my ability to use Chase for my customers as a broker, I'm still able to, and I'm still able to at 3% down. So kind of interesting there. So I would say overall, the ability to get mortgages by the average consumer has barely been affected at this point. And I don't expect anything to ever get to the point of requiring a 700 score and a 20% down payment. That's not going to be standard practice. It wasn't even standard practice back in the mortgage meltdown of 2008. So I don't anticipate that coming anytime soon. So hopefully that answers that question. But even if every other lender in the world had some draconian new guidelines, Megastar Financial has their own product line, and we are writing to the standard Fannie Mae Freddie Mac guidelines, which, by the way, have not changed. Fannie Mae and Freddie Mac have not changed their guideline. Any of these changes that you're hearing about are individual lenders. So hopefully that clarifies that. Are rates going up? That's another one. What's happening with rates? Believe it or not, with all the turmoil that's going on, rates are almost dormant right now. They're hardly moving. There was a period there a couple weeks ago where they were chaotic and very volatile, but now we're not seeing much movement. And I don't anticipate a lot of movement in the future for a couple reasons. One is the feds are still buying mortgage-backed securities, which are, in a lot of senses, even if the appetite from investors is not there, there's still a demand. So they're still getting bought, which means it's keeping rates low. The other thing is, you got to remember, rates only really go up if the economy improves. Okay, when people when it's a bullish market and people are investing in stocks, taking their money out of bonds, mortgage-backed securities, T-bills, things like that, that's when you see mortgage rates go up. So unless you think the economy is going to boom anytime soon, don't expect the rates to go up either. Next question: will forbearance affect your credit? This is a hot topic and something very important, okay? So on the one hand, people are getting calls from their servicers asking if they want to go into forbearance, take 3 months off. First of all, I have no idea why a lender would proactively call a consumer and ask them if they would like to not make payments for the next 3 months. This boggles my mind. So if this is true, I just don't understand why a lender would not want to get on-time payments. But even if you do a forbearance, be wary, because there are a lot of unknown consequences to this. First of all, you're going to have to talk to your individual servicer to get the specifics on how this forbearance will work, because a lot of them want to get paid the lump sum of the 3 months that you skip on the 4th month. So on month 4, you're going to owe 4 months of payments, and that is that might be difficult. Plus, the other thing is, we don't really know how this is going to affect people's credit. There really hasn't been guidelines established to whether this is going to count as a late payment or a modification. So I would use forbearance as a last resort for right now. That's my advice. last topic. Can people still buy and sell during a pandemic? And more importantly, should they? I would say strong yes to the first part. People are definitely still doing transactions. If anything, there's fewer buyers out there right now that are actively searching, so have a better chance of getting that property without having multiple offers. But more importantly is, should you buy, right? And that's where I'm hesitating whether to say yes or no, because it's very difficult for me to predict the future and figure out if this is a good time compared to 3 months from now. People are asking me, hey, do you think home prices are going to go down? I don't know. Ask your realtor. Realtors are more important than ever right now. Your realtor is one of the most important resources of information, and it has their ear to the ground. So that's their area of expertise. I would highly recommend reaching out to them. As far as, hey, it's a great time with rates. Prices are still good. So in that sense, it is a good time to buy. People are doing it all the time. And really, I guess my real answer would be, do you need to buy right now? If you're planning on selling, if you need to buy, continue as planned. Really, for the most part, nobody really is being affected by this in the way that it's affecting their qualifications or their ability to buy or sell, etc. So I would say go ahead and move forward if that was your original plan. And if it wasn't your original plan, I don't think this is especially a hot time to take advantage of some kind of great deal or anything like that. It's actually surprisingly business as usual. So it may not feel like that, but for us in the mortgage business, it's not that much different than it was a month ago. Hopefully this answers a lot of your questions. Feel free to shoot me some more. I'll probably do another update video in a week or so. And really, I hope this is really helpful for you. Again, this is Marcus Downs with Megastar Financial, and I'll talk to you soon.